Hey everybody, what's going on? Hope this finds you doing well. This is Danelle, and today I am going to go over some of the biggest news stories over the past week in the world of cryptocurrency. But as usual, let's go ahead and start with the cryptocurrency market update. As you can see, Bitcoin is currently trading at $26,841, down nearly 4% over the last 7 days. Ethereum is currently down almost 5% over the past week, currently trading at $1,555. And what we've noticed with Ethereum is that it's basically been trading within a range of about $1,400 to $1,800 essentially most of the year. So it's been fairly quiet most of 2023. There's been a few exceptions where it went up to above 2,000 for a moment, and then also a little bit below $1,300 or around $1,300 for a little bit. But essentially, it's been in that range. So we'll be curious to see what happens over the next several months, particularly as we get ready to hit the Bitcoin halving in April, around April of 2024. What's going to happen to Ethereum, if we're going to see a pop up anytime soon, or even potentially a pop down before we go into 2024. One of the bigger news stories that we heard about this week is that the SEC is reportedly not going to appeal the Grayscale Bitcoin ETF ruling. So earlier this year, really a couple months ago, a federal court ruled that the SEC did not give reasonable justification for not allowing Grayscale to apply for a spot ETF, or I should say to turn their Bitcoin Trust, which is GBTC, into a spot ETF. They have approved futures ETFs, and they actually just recently approved an Ethereum futures ETF as well, which basically has to do with trading the underlying asset on a specific date at a later time. So you could basically either bet that it's going to go up or go down by a specific date. So many believe that these futures ETFs are actually a lot riskier than a spot ETF, which basically just follows the price of Bitcoin or Ethereum, for example, on the spot. But anyway, the SEC had approved the futures ETF, but they still have not approved a spot ETF for Bitcoin or any other cryptocurrency. And Grayscale had applied to have their Bitcoin Trust turned into a spot ETF. The SEC didn't allow it. The Grayscale then went on to sue the SEC, and they ended up winning in court. And now we find out that the SEC is not going to appeal that ruling. So there's a higher likelihood that a spot ETF is coming. Now it's a matter of who's going to get that spot ETF first. Many prognosticate that it's going to be BlackRock, which is the largest asset manager in the world, that manages, I believe, nearly $10 trillion. Also, there are a bunch of other investment funds that are also applying for a spot Bitcoin ETF, along with Grayscale, as well as ARK Invest and many others. So as you can see here, the SEC does not plan to file that last minute appeal challenging the August court ruling. So as you can see, the court had ruled that the SEC had been arbitrary and capricious in its rejection of the Grayscale application to convert its BTC trust into a spot market ETF. So now that this has come to pass, there's a possibility that the SEC will be approving some Bitcoin ETFs. They still can delay applications asking for information and things of that nature. So we still may not get an approval until the beginning of next year, or maybe sometime around the Bitcoin halving. So definitely keep an eye out on what's going on in the cryptocurrency market, particularly around that time, because what could happen is that when these spot ETFs are approved, that means that gives the go ahead for a lot of institutional investors, a lot of the big money to come in and start to buy up these Bitcoin ETFs and get a small percentage of an allocation into Bitcoin. If that's the case, then we could potentially see a deluge of money coming into the Bitcoin space. And because Bitcoin is finite, it is hard money, and it is considered the most secure and decentralized cryptocurrency and digital asset, we could see Bitcoin skyrocket in price, because at the end of the day, as we know, there's a small supply and there's only going to be 21 million Bitcoin ever in existence. So one of the reasons why a lot of people may be looking to get into Bitcoin is because the United States in particular continues to have a rise in national debt. If we look here, the national debt explained is that it's the amount of money the federal government has borrowed to cover the outstanding balance of expenses incurred over time. And in a given fiscal year, it can be spending those funds on various federal government programs. And what they do is that they borrow money from us and from other governments by using treasury bonds. And what we're finding is that they're continuing to go more and more into debt, and they're not covering those expenses. So they continue to have to borrow more and more money from outside sources. So if you look at the total public debt and look at the chart from around 1970, you can see that it remained fairly flat for many years. And then when we went to the 90s, you started to see a major increase. And then once you hit the 2010s on forward, it just went on a high to the right trajectory. And so now we're upwards of 33 trillion actually at the time of this posting. So we are continuing to go into debt, and people believe that there's a possibility that in order to cover some of those debts, at some point in time, the Federal Reserve is going to have to print more dollars. And when that happens, that means that the value of the dollar will then go down because there's more supply. And so when the value of the dollar goes down, then where are people going to want to put their money to store value? And that's why Bitcoin is considered a great store of value. So Fidelity, which is another very large investment manager and has a ton of trillions of dollars of assets under management, similar to BlackRock, they do research studies on Bitcoin, and they have their own Fidelity Digital Assets division. If you go to fidelityassets.com, you can learn more about this research study, which recently came out in October. And I believe they do one at least once or twice a year. They've been studying digital assets and Bitcoin in particular for several years now, and are offering trading through their digital assets platform for institutional investors. And I believe at some point in time, if they haven't already, they are offering trading opportunities for retail investors as well. So if you see here, their executive summary is basically saying that Bitcoin is best understood as a monetary good, and one of the primary investment theses for Bitcoin is as a store of value, and it's an asset that is increasingly important in the digital world. Bitcoin is fundamentally different from any other digital asset. No other digital asset is likely to improve upon Bitcoin as a monetary good because Bitcoin is the most secure, decentralized, sound digital money, and any improvement will potentially face trade-offs. So this is basically the key sentence here, is that no digital asset is likely to improve upon Bitcoin as a digital good. So there's lots of studies, a lot of research that has been done on Bitcoin, as we know that it is built on top of the blockchain, which is a transparent and secure platform. So actually, people in the government are starting to realize that Bitcoin could be a great use case for being able to find financial crimes when it's much more difficult to do with fiat currencies. So one last quick little story to get to before we wrap this video up for this week. Ferrari, an Italian luxury automaker, is going to accept cryptocurrency as payment for its cars in the US. And they also will be looking to also accept it in Europe as well, I believe sometime at the beginning of 2024. And so they will be accepting cryptocurrency through a platform called BitPay. And what happens is that you can pay with your cryptocurrency, and BitPay will be able to automatically convert that crypto directly into fiat currency. So whether it's dollars or euros, whatever currency that Ferrari accepts or wants to keep. And so it's an easy transaction, and they won't have to worry about the volatility of cryptocurrency. They can immediately put it into dollars or some other fiat currency. We saw that Tesla a couple years ago had accepted payment, but they then decided to pull that back because of environmental concerns. But people are learning more and more about the opportunities for Bitcoin miners to use clean energy, renewable energy. So they're actually not using as much energy that a lot of people are putting out there in terms of the narrative, because when we think about the general traditional finance system, they also use a lot of energy as well. So it's really hard to say that Bitcoin is using any more energy than any other major traditional financial system. So just as a reminder, first off, thank you for watching this video and listening. We always appreciate and we look out for your comments. So please feel free to comment if you have any suggestions or something that you want us to talk about, because we're all learning together. Feel free to check us out on Instagram as well as X. We post there nearly every day, and you can see we talk about all the different stories that are coming out in the cryptocurrency space and a lot of interesting things that are happening as the blockchain continues to emerge and develop despite this bear market. So make sure you come check us out over at Instagram.com. And in the meantime, take care, and we look forward to linking up with you on the network chain very soon. Bye-bye.